every time I switch this tab on TradingView, I see this and I just jump because I'm so trained for trading here, right at this spot. I want to be in it. I don't care which chart it is. If I see it here, I want to be long. And the moment I see this, I'm like, oh man, I missed it. It's a beautiful setup one. So what would you like to talk about, guys? Anything specific in mind? Okay. I'll carry on with Forex. Let's do some analysis. Because DAX is not moving today. Actually, let's first go there. Ooh. All these silly lines. Let's get rid of them. That's how you get rid of them. Show executions, gone. Apply to all, close. So this is the daily chart. Okay. So before the pandemic, not the pandemic, before the where this election was almost like a pandemic as well. But before the election, I think it went down, and then after the election, it went back up, bringing a lot of volatility during this period and that. So we had a down day yesterday. So that was probably the first down day in that many days on DAX. But anyway, DAX, we're looking at this. This is not a pretty chart. So compare this to the other chart that we saw on the daily chart for LE, Land's End. That's the type of pattern we're looking for. And that type of pattern will happen only if volatility is high, right? And this is not that sort of day on DAX. So yeah, we still traded it here. So what would be the reason for trading this at the London Open? Well, we can see that we have three trend candles, and there are some levels to the left, that's fine, but we do know that London Open could bring volatility. So we have a two candle pullback back to the box. I'd be looking at it from this perspective. I'd be seeing it like this because that's how I see it for the low bot, and it's pretty obvious to me that it's hit this level and this level, but it doesn't really matter. Support resistance really don't matter for the low bot because we are relying on new orders like an influx. So it's a CIP chaos influx point. We're open at the open, new orders enter the market. So the entry was from here and it went up. So this shows as 6.15, but on MT4 the entry was around 13. So the price was here somewhere because it's a different feed. And you went from 13 to 38 on that feed. So the fact that when price goes up at low bot and then hits those levels to the left and then reacts to it and comes back like this, you know, when the reaction is so strong, it itself is an indication that there isn't enough power. So because it's hit those levels, then you want for price to actually clear those levels because DAX can do it. And if it does, then we can trade above those levels. But obviously it didn't do it. Came down, went up, lost power. When this happens, when something like this happens, like you're expecting a new high, which is supposed to be above this, instead it creates a lower high, then this pullback or this pullback is not what you take. Then you have to wait for this level to break. So when this level breaks, you can either take a breakout on that, if you like, or you wait for a pullback after that. So Doug was asking why I went long on this over here. It's because it created a new high here after this. So that's a new sequence, and this was the level to the left, but it reacted to it, so created a pullback, which was a risky opportunity. Maybe if it breaks out, I could take a trade. And obviously the answer to Doug's question is in there. I took a risk, and it was calculated. I knew what I'm doing. I wanted to entry to go in, and it blast off. If it doesn't happen, I'm quickly out. So it was -2 quickly. As soon as it goes up, started coming down, I was out. Then this is that deeper pullback. So you have the 3 pins, so like 1, 2, 3. These two, if you combine these two candles, right, this would be one gigantic pin. So this is like 2 pin bars. So not the ideal situation, but when it came down, hit those levels, started going up, I took another risky entry here and exited there. So that's how I trade if the market is not really strongly moving. There's still opportunities as long as the angle of the chart sort of goes like this. See, around 45 and above. Right. So everyone can see my chart, right? Thank you. Let's go to Forex then. Okay, so we will look at Forex from the daily point of view, and we'll bring the setup 1, Australian dollar CAD. So I haven't really followed this pair. I'll just go to Australian dollar instead. So what we see is that the mild reaction to the election went up, it pulled back, now it's pulling back towards the gator. So in this situation, I mean, when your daily chart is above the box and it's above the gators, anything on the 4-hour chart is going to be worth it. So this is a potential situation on the 4-hour chart. Is setting up. So probably a few candles later, or a day or two, probably on Monday, this would be a setup 1. So if it forms a box like this, the gator would go in, and then you have something like that. Here we go. Here, go something like this, and then we can take a trade up there, which would be a nice pullback on the daily. So here again, that things happened. The one candle pullback, there was a fake out here. See, these levels play their part, especially in Forex. This level and this level, price reacted to it, came back. Now you want a reaction at this level. So if it starts to go up, then this level will have to play its part. But so far, when the market is above the box and above the gator on the daily, most of the setups on the hourly and the 4-hour charts, you'll just keep taking them long. Right. If anyone has a question about anything, then, you know, any pair they want to talk about, please let me know. Otherwise, I'll just talk about something. So let's go to CAD yen. This is a pretty sideways market throughout. Everything after the pandemic is going sideways. So the CAD and yen. This probably would have created something on the 4-hour chart. Let's have a look at it. Yes, not a setup 1, which is probably no reason for you to take this trade unless you had some other information inside it. So this is a B trap. As you can see, there's no fresh cross. So B trap after a very strong move like this is very imminent. So you have to be careful about, you know, when there's a very strong move, price peels away from the Gator new peak, and then it goes sideways. And specifically because during it, so when you have this chart, right? Let's mark it. You have something like this happening. It's very strong, but it's inside a sideways market. Then in most cases, it just loses that energy. It hits those. So it's the same like the other day we were talking about the DAX M1 and all that. When it's in range bound, when your higher time frame is in range bound, on a lower time frame you might see a setup, but there will be no follow through because it's hit the resistance levels up there, and now it can't find more buyers in there. Now obviously this is currencies, so it's not like stocks. We can't even say in currency, oh, there were more buyers and stuff, because there are so many different factors in currency. Okay, let's go to Euro Australian dollar. This is a volatile pair, pretty good for certain time frames. We can see just before the pandemic you have this break. So that's its natural move. Probably nothing to do with the pandemic, because the pandemic reaction is actually negative. So this was probably something going on. So that's one of the really nice pullback setup. You have three pretty nice red candles, and the Hunt 2.0, the pullback method, usually would have the light green AO. It wouldn't have a dark bar. So the momentum up is strong, but there's a small pullback. That's what's happening. So we had one here. So if you went long above here, your stop loss would be here. And then it went so fast up, and it's probably hit your targets. If you didn't take profits, it came down. So then you had to wait for it. But that also created another pause scenario. So you have a seed here. Your risk is very low. You go long there, stop loss here. Currencies on the daily chart provides beautiful opportunities, but you have to be patient. You can't take it, you can't force trades into it, but you can't miss either. On the daily, it's very difficult to miss unless you just don't check your charts. So I think daily is a very good time frame for Forex. So over here, and then it goes up, and this was a strong reaction. So I thought I'd just talk about this lovely pullback setup there. So if you look at the chart right now, I think I will extend my previous zone that I've created here. This was for these levels. So like for example, if you were looking at it here to go short, you had these levels to contend. Excuse me. So these levels were there, and you don't want to take a trade, or if you want to take a trade, you want it to be at least far enough that it goes 1 hour in your favor, so you can move your stop loss to break even. Or you can just target that as a target point, or at 1 hour you can actually close half and either leave your stop loss at where it was, a technical break even, or bring it to break even so you can lock in some profits. So what's happening right now? Well, again, it would be interesting if you find a setup underneath over here. You would know that it's within sideways market. So if you go to the 4-hour chart, we have a 3 down, 4 up. It could set up, but you know that these are your levels. So it would depend. So if if it sets up and the box is around this level, then you have enough distance up to the peak of 3 and the next, you know, that support level that we have. So it will be a pretty good setup. You can probably target this. But if the box was to be created somewhere here, move it please, then probably there isn't enough distance because you have the peak of 3 and the other resistance there as well. Next one, Eurocad. Any questions so far? Right. Eurocad. So let me talk about this. See, this, like to an untrained eye, this would either look like a setup one, a nice setup one, or it would be a bit confusing for those who look at minute things, like every level, which is a good thing to look at every level. But to clarify this, this is where this is where it entered the territory of a setup one, when we had the first cross of the zero line here. And immediately, a few days later, you have your first entry here, which failed. So when this failed, around here, after that, you consumed kind of one attempt. But the next one, when it started coming down and then it went up, it was highly volatile and it went up. So taking a trade over here on a very long box, not long, tall box, would be a bit risky. But if you did take it, you would get out immediately instead of waiting for it all the way. Some people would actually take trades here and have your stop loss there, and then they would wait ages and days. I don't do that. So that was the first attempt that failed over here, and that's the second that failed. Now, what's interesting is that once this failed, suppose you took both of the entries and took small rents, you do not then consider any of these levels unless this level is broken. That's it. So it saves you those rents from here. You don't have to consider these, because this is now the inside range of the wave 4, the worst wave. So you don't want to be inside the wave 4. You want it to break out of it. And that breakout happened kind of weeks later over here. So you won't even take this reaction. You'd actually wait for the reaction, comes back, and then you could take a trade here. Even that created a PC. So by that time, probably you took a third one and quickly got out. So this is so complicated. When you have a wave 4 that extends this long, just don't even count it as wave 4. And that's why we have the purple rule. So once the purple goes in the box, it has now become a setup 0, which means it's complicated. It's up to you if you want to take it, but you have to keep in mind that most probably this is not that same price action that's going on. So like when we take a wave 4, break out a wave 4 into wave 5, we assume that it's the same kind of price momentum, same kind of buying or same kind of market that's happening that created this wave, and then it's taking a pause, and then there's going to be a resumption. But when the wave 4 time-wise becomes so long extended that it's even taking longer than it took to create that wave 3, most probably there's a disconnect between the two. So when you have a very long time-wise on the x-axis, a very extended wave 4, we can easily discount it as wave 4. This is not a wave 4, it's something else. And it's like for various different reasons. So one of the reasons is that most probably your higher time frame is stuck within a sideways market. So this is a daily chart. you see that was a daily chart. This one, I'll mark this here, and then we'll go to the weekly chart. So we see that weekly overall is sideways. It's hit some major levels over here. Then you have other levels here, quite a lot of levels. And although there was this initial spike up, but there wasn't, the reaction wasn't followed. That's it. So if you look at the weekly chart, even your first pullback, you see this is where I assess the quality of the next wave 4. Even that first pullback, and you see it's a very strong reversal over here. This is a pin bar, this is a pin bar. So we don't want to see a pattern like this on the 5 times higher time frame. We would have liked it to be similar kind of green candles, and then 2 or 3 pause candles. So like just like that. Which chart was it? This one. So what we want to see is something like this, you know, like a nice clean break, nothing to the left, and then a pullback. So this would create nice lovely setups for you on the lower time frame. So this is pullback. I think it's a 3 candle, so probably on a 4-hour chart somewhere in March. There we go. So if you look at it, now this is a very clean setup one. So like I said, when you're on a daily chart, you wouldn't want more than 3, 4, or 5 weekly candles to be pulling back. So in this occasion on the daily chart had 3 nice and smooth red pullback candles, and a nice clean wave 3 here. That turned into a beautiful wave 4 over here. Unlike the other chart we saw, it's going sideways, the purple caught up, it was ugly. So those scenarios will happen on the M1 chart, the M15 chart, whatever different chart. We don't want to take those because there's a disconnect between the 3 and the 4 in that situation. Over here it's nice and clean, it's fresh. You have a 3, then it takes a ABC correction and it goes further. Right, I hope that was slightly helpful. Oh, here we go. 1 minute chart. Which one? Which pair? Oh, right now. Okay. Mm-hmm. Well, I have to do some analysis first to see what's happening. So I'll go to the hourly chart. So first of all, on the hourly chart, I can see that yesterday was a strong bullish trend, and now it's in that curling zone. So you know where that the eye of the gator would pop out here. So you see this, the green line is curling. This is basically kind of wave 3 is peaking, and so I have my first level here. So if I was going to prepare myself for the M1 chart, right, I would mark this, I would mark that level, not like that, Alt H. So I see this, and I also see, so it is confirmed to me that today the market is range bound. Right, now let me go to the 5-minute chart. Clearly I see that my 5-minute chart is that range, and that range we already saw on the hourly chart. So the market has now it's at the low, it's near the lows of the range. So I will not touch this chart for any pullback or any type of entry because this is a range. So before I go to the M1, I want the M5 to be clearly trending, and I can already see that M5 is not trending, and it's near the range. So if I go to the M1 now, yes, I can see a really nice, beautiful move down, but I'm well aware. See, it's already done that. See this? It's already done that once, and then it was met by the other orders, and then it came back to those levels and came down. So there are ways to trade them. Like if you're invested in this chart, you have studied it, you've been after it. If we look at it, so this is, so for Forex you would start at Frankfurt Open, which is the 7 o'clock time in UK, and that's where the banks start. European banks are open at 8 o'clock, and British Bank again at 8 o'clock, which would be here. So that's 8 o'clock for Europe, this is 8 o'clock for UK. So if you had identified that range, and you are into range bound trading, like, so in Forex quite a lot of traders actually do trade range bound, even on the 4-hour chart and stuff, because most of the time it stays range bound. So from that point of view, you could take setups between the two ranges. So the range high and low, if there's a setup one that happens on a certain time frames between the two boxes, you can take that, and the idea behind that is between an upper a box high. So let's go to the hourly chart. See this box high and this box low. The rule is, the Elliott wave rule is that between an upper level of a box and a lower level, or an upper fractal and a lower fractal, there's always an Elliott wave of a certain degree. So in this case, if we go to the 5-minute chart, between the box high, so that's the fractal high, and this is the fractal low, and that's the fractal high, and now it probably created a fractal low. So between the high and the low, there's always an Elliott wave of a certain degree. So to get that, you'll have to go to the correct chart, isn't it? But we don't have enough candles on this. Like for example, this would have created some wave of a beauty somewhere here. Let me see, because we can access them. So let me mark this. I can already see a 1-2 on that. So if I go to the 15-second chart, I'm not saying we should trade the 15-second chart, but I'm saying, well, we don't have enough data on this, but that's like 1, 2, and a 3, and then there is no 4. That's very typical of a range-bound market. So you'd see a 2, a 3, and then you have a setup 1, but there will be no follow-through, because setup 1 is not for range-bound markets. Setup 1 is a growth pattern, and growth does not happen during stagnation. It's consolidation. So when it is consolidating, it cannot grow. So, but yes, there are different fractal levels and stuff. Good question. So that's that, and all right. Let's just look at, I thought I would just quickly go through this in 5 minutes, but that's like half an hour gone. Anyway, I'm gonna look at, yes, yes, we missed it. And nobody prompted, Doug, come on. I know you're looking at your DAX chart. Look at this. Look what just happened. While we were doing that. Okay. Let's change the screen. Change window. Yeah, thanks for letting us know. That's why we're here in a live trading room. How can I watch it? I'm talking about the bloody currencies. I can't have octopus, no, not octopus. What's it called? I'm not a crab. He's like, my eyes are going left. Yeah, I do look, but I wasn't looking. I had no alarms as well. It's nope. Anyway, this was so I should have been alerted around here, around that level. Never mind. So it went up on the M1. You can see. Let's bring my setup. There we go. So we have the beautiful pullback. In this case, we have 1, 2, 3, 4 candle pullback, and then there's a couple of candle pause, and that created this lovely setup one. So entry would be, let's say on this chart, 63, and you probably got out at 82 on trail. Beautiful. So yeah, next time when we are doing anything like this and someone else is seeing something, it would be nice if somebody goes, oh, by the way, DAX has broken out of a range. So we could have then, I mean, if we caught it here, we could have taken a live trade on it and everyone. So that's fine. And then, so here's a pullback here on the 15-second chart, a couple of candle pullback, but you know, when you see a move like this that goes so strong up, and then there's a pullback, you can take it, but then with a grain of salt, it's kind of, you have to be quick. And because it's moved up, now the probability of resumption is lower, so then you'll have to kind of get out quickly if it turns around. So this was a pullback that could have been taken on the 15-second chart if you're into that. But otherwise, the best thing is to just take setup ones on the 15-second chart and watch for those pullbacks. But as we know, the most important thing that I'm trying to teach everyone these days again and again, which I've noticed everyone makes this mistake, is that don't trade within those ranges here. Let it break out, because it will break out. If it's gonna move that day, it will break out. So wait for that break, like here, it broke out. So could you have taken this? Yes, you could have. Could you have taken this? Yes, you could have. But if you continue to do that, you will collect many rents over the course of your next 20, 50 or 100 trades. So I'm saving you that time. You can find it out yourself if you like, but if you don't keep records, then chances are that you would make a subjective emotional analysis. Oh, the setup doesn't work, or oh, I am not a good trader, or oh, the market is untradeable, or oh, nobody can make money in Forex, or nobody can make money in trading. And those kind of objective, subjective or emotional reactions come out of this because they don't have data that is true for them. So if you were to take all of these without checking the levels and all, in fact, when I'm looking at now, this is a setup one. On M1, this was a setup one. Probably not take this level, but this level could have been taken. What's the distance? 43 to, well, not enough distance. It's not a 1R on this. So obviously, for this, the best would be to wait for this level to break. And in this case, this level broke, and you're probably sitting here not very happy with yourself, but then you wait for the pullback. And then if you took the pullback, so you see, when the market breaks the levels to the left, it breaks it for a reason. That means that the equilibrium that was created over here between buyers and sellers, or the lack of orders, has now been shifted. It's been tilted over. So now the buyers or the buy orders have exceeded the other side, and now the price is going up, pulls back, you go in, you have a lovely entry. We, of course, obviously missed it. I shouldn't be missing this because this is inside my 2-hour window. So, but I think I kind of gave up on it. And that's why we have the alarm set up. I think I forgot to set my alarm somewhere around here. So if my alarm was there, the pop-up would appear, and then we can say. And in the chat room, I think we should kind of, everyone should be on the alert and stuff. And when they see something, yeah. You just right click on any price and you'll see there's a, it says set alert. So you have right click, the window comes and you trading, and then yeah, alert. So make sure when you right click at that same price where you want the alert. Like usually I would bring the crosshair, and whichever price is, then I will right click, the window would come, then trading, set alert. And then yeah, you would even see an alert bid, an arrow pointing towards price on the right side when the alert is set. A lot of people think, oh, when I set an alert it disappears, and that's because of the chart settings. So you'll see on my template, you'll see a faint kind of gray on the right. There'll be an arrow, a dash line and an arrowhead, and you can set a timeout. So when you set it up on the arrow, you can actually right click on it and then modify it, and you can delete it and disable it. It gives you 3 options. You can set it to bid, ask, time, value, all sorts, and you can select the action as well. So one is sound, the other one is a file, the other one is a mail and notification. You can do all sorts of stuff on this. There's another option in there, maximum iterations, 3 or 5, like how many times you want it to alert you. You know, because price can go back and forth around that level. So, yeah. Anyway, this is for me the when I look at the charts these days, like so. If hold on, can you see my chart? Is it on DAX? Yes. So this would look like an alien chart to somebody who's used to IMMY'S template and stuff. But if you simplify the concept, you see I'm not long here. Why? Because this break has failed. See, this is where you would be going long. And I wasn't going long there because it's stretched. Right? This is not the scenario I want to catch. This is the scenario I wanted to catch. This is the scenario that I would have loved to catch, to have caught. And then when this pulls back and you have this candle failing to create a new high, then I'm not interested to take this, because anything after this until this is broken is actually the beginning of a sideways market. So it will have to break that and then pull back, and then I can take it, but by then it's even more extended. So if you look at this wave up, this is actually the first pullback and this is the second pullback. So this is now the third one which failed, right? So we go to the 15-second chart and it will have a setup 1 in there. So let's bring that. And why is it not for you? Yes. I mean, I think the only thing here is that it's extended at the moment. Yeah. And plus it's already done a wave here. But if you were to teach a new person and you'd say, yeah, this is setup 1, go for it. Why? Because that's how they will learn. This, like, technically, it is a setup 1. But can I filter it? Yes, I can. What are the bases? Well, the bases are that the M1 chart is extended. It's done 2 waves. So if you look at it, it's the 3rd dark bars on the M1 on the AO. So you have the fresh cross of 0 line here. You have dark bars. Then you have a new peak. Then you have dark bars. Then you have a new peak, dark bars again. So this would be 3rd attempt on the wave, and most probably it will fail. So for that reason, we will filter this. But over here, it was very nice. Over here. Bang, bang. So this is the type of pattern that you need to memorize, this bit here. Let me go to a double chart instead of a triple one. So let's go here. I'm going to change this. This is important. See, to identify, to be successful in taking the setups, you need to learn this pattern. So although when we share charts, we share the completed wave 5, which looks beautiful. We see 3, we see 4, we see 5. But in order to be able to take this setup, you need to learn this pattern, because this is setup 1. The other one, as in here, this is completed setup 1. So most of the time we will look at this, and then we train our brain to say, so we learn this pattern as a completed one, and we like it. We fall in love with it. So this is a beautiful pattern. But when we are trading, then your brain is looking for this pattern. But you can't look for this pattern unless it's printed, it's created. And when it's done, you miss the trade. So what do you need? So in reality, the setup 1 is actually this. This is what we need to learn. Peak of 3, and then you wait for a fresh cross of 0 line. And then over here, you begin to think, okay, now, as price says, see here, breaks the low, comes to this level, does not break it. So now you're thinking, okay, wave 4 is probably finding its footings now. It's going to go consolidation. Immediately, it breaks out. So how would it look on the M1 chart? So on the M1 chart, you can see that the first break of a pullback candle was actually this candle. What time is it? 9:28, which is somewhere here. So this move up. So if you were following the Lobot or the pullback method with the 2 MAs on the M1, you'd be long on this candle. And then it would kind of scare you a bit because it would come all the way down. Most probably, it's possible that I probably went long here and got out quickly. And then I won't take the high of this candle on the M1. I would actually take the high of that candle, that one there. And the reason for that is that if this failed to go up, and this is not a pullback for me, and that follows that same logic of the box. So as you can see, if I take the high of that candle, it's like taking the box, right? So I would take the box, which would be 63, and then, well, it just quickly goes. Like, it was very, very fast. So if you missed the initial entry here on the 15-second chart, you had a waltz pattern. So that's waltz. You have 2 strong trending candles. Let me bring that other pattern template. You see this? 10 crosses the 20, price goes above, breaks this level, and the next candle is pause, inside candle. You go long at the break of this. If you didn't take this, then you had the next one here. So this is how we can catch. If we miss the initial entry, we can quickly catch it. So if you caught that, then you had that opportunity. In the case of this breakout, so suppose you were trying to take the M1, but you were worried about the levels. No, it's supposed to be soon after the breakout, the initial breakout. So there's no count on this. It's just 1 or 2 near where it breaks out. Once it breaks out, then nothing is walls. That's just inside bar. Yeah. So like over here, you have the pullback scenario going on, right? And then obviously when the pullback scenario was happening, so on the M1 it was a pullback. With the 15-second chart here, we were dealing with a sideways market. We were dealing with a tiny wave 4. See, a reversal was happening. You know, the turnaround. So the price is going down, and this breaks. This break fails, which is suggesting that now the bear move is ending, and now it's reversing. And as soon as it breaks this lower low, at that time it was a lower low, it breaks it. So that's the breakout for you, and then it takes a pause. It becomes a waltz. So this is your waltz, this is your waltz, because of the same situation. But when it happens over there, well, it's already done its thing. So there's no edge in there. And so earlier, if we were talking about this, let's suppose you were looking at it, you were looking at this M1. Let me get rid of this so you can see. So this was a possible setup 1, but there were levels to the left. You were concerned, so you wanted to wait. And as soon as this candle breaks and closes there, you have this pause candle next to it. So this also is a type of a waltz pattern. So you can either take entry straight away at the close of it and have your stop loss somewhere here, or you can take the high of that. What would it look like on the 15-second chart? See, that's same. That's why I have this cross here. Can you see? Price goes up, and then you have a 1 candle or a 2 or 1.5 candle pullback, and you could have timed your entry here. So this is that doji candle, this one. So that's also a waltz. See this breakout, pause, and that pause you can either take it on the M1 or you can go and refine it on the 15-second chart to look for a pullback pattern. That's your pullback. You go long, goes up. So as you were saying, this up on the 15-second, you know, that setup 1 on this one, that was good as well. So well, 1:2, easy peasy. 1:2, or any levels to the left that you are dealing with. So if you think the market is going to react to that, then that could be a target, or you can just trail candles. So in this case, trailing candles was pretty good. So 7-0 entry, goes 8-0, goes 9-0. I probably could have taken 20 there. And if I stayed in, as soon as this candle started going down, I would get out somewhere here or below the low. So there we go. So this setup 1 scenario was difficult. So if you took a trade here, you paid a rent. Then you took a trade here, you pulled back, and it went up. So sometimes there are 2 attempts on the setup 1 to succeed. this one did that. But when it becomes complicated, like it has, you see there's this failure, then there's this failure. I just stay away from it. I want it to break out. So that's my kind of point of view on this. Wait for it to break out, because we have the pullback method now. So you can let it break out. Like for example in this, you waited for it to break out, and then you have this pullback. And if you don't take this pullback, then you have this box. So you have a box level, a setup 2, which has no levels to the left. Whenever we take a setup 2, it will hardly ever have a level to the left. Otherwise, it's not a good setup 2. So there you go. $11, $9.41 here. Nah, I won't take it. For this, for taking these and to find success over in the longer term, you'll have to go with fixed stop losses which are always below the low of wave 4. Whichever level you think is the lowest level of wave 4, if you make an entry here, you will not exit until that is hit. And that is something that I cannot do. But I have done it. So you will be in here, you'll have your stop loss down there, you'll be waiting for all of this crap to happen, and then it would go and hit your target point. So that's okay if you take it on the hourly charts, that when you're not looking at it and you go away from it and the ATM is managing it, that's fine. But if I'm day trading and I'm looking at the chart on a 15-second chart and I take an entry here, then I'm never going to wait through all this rubbish. No. I'd rather get in moves like this. It moves. So you see, this could have turned into that rubbish as well. For example, you enter here, hits that level, comes back. I'm not going to wait for it to break this low here and hit my stop loss. No. If it went up, started coming down, I'll be out. Forget it. But if it continued going up, so every entry that I take, my mindset is trigger, go. Trigger, go. If it goes and pulls back, I'm out. Forget it. And that's why average winner is 14.15, average loser is 6. That's it. Anything else? Is that all you've ordered today? Would you like some fries with the order? Oh, that's nice to hear. Yeah, that's what I've learned. Like, only trade the markets that are moving clearly, and when you have a higher probability of success. If it's already showing you that there are levels that it's reacting to it and it's finding it hard to break, don't become, kurbani ka bakra. Yeah, right? You don't want to be that, how should we put it in English? The sacrificial lamb or something. Yeah, yeah, goat. Do not sacrifice yourself for that. Like, don't be, I always say, I don't want to be the trend creator. I just want to be in it when it moves. So if you go entries inside this, you are trying to create a trend, or you are trying to be with those who are trying to create a trend. I don't want to be one of those. I want them to create the trend, break the levels, and then we can take. So even this would be difficult for me. If I went long here, I'll be out here. I'll be out on this, with the intention that I might go back in there. Because if I keep getting out, if I keep getting in like this and getting out and then I don't pursue it, then I'll be doomed, which makes it difficult. But instead of taking trades which go like this and then I have to wait for it to go, I'd rather take entries here and get out there. Right? So there you go. All right. We had 1 hour talk. One more. You're welcome, man. That's nice. Thank you, everyone. See you tomorrow or later.